Hello everybody, and welcome back to 5 Minute Crypto, the channel where we cover the most important crypto news in just 5 minutes, back again with another breaking news episode. Starting it off, I don't necessarily know if Ethereum fees are at all-time high, but they are extremely high right now. They are extremely high, and either one of these days, here it says Sunday, some have said today, whatever, it has made new highs in terms of average fee, which right now is $10 per transaction. This really makes me think about the 2017 bull run, because back then, sending some Bitcoin or Ethereum around was still a very big hassle because it was just that expensive. Now, right now, again, it's just gotten to a ridiculously new high, at least really high. It possibly didn't really go above the all-time high. Who really knows? Who really cares? It's just extremely, extremely high. And a lot of people are saying this is due to DeFi, the big boom here. Even though CryptoKitties was definitely also an interesting situation, it is just extremely high right now, which shows once more to me the bigger scalability issues that hopefully will now be getting fixed with Ethereum 2.0, which we are getting towards. Then Stellar was pumping a little bit, most likely due to this. The SDF picked up by Ukraine's government to develop a CBDC. Ukraine has signed an agreement with Stellar Lumen Development Foundation to create a national central bank digital currency. The Ukrainian government also seeks to develop a market infrastructure based on Stellar. So this on its own is not really a big thing, but I actually think this is way bigger and drawn way more out of proportion, as it's happening in a time where Stellar is being looked down upon for having a resemblance with XRP. The main reason I'm saying it's not a big thing is because we knew all of this like a week ago or so. Right now, I think they just might have signed the agreement, and like a week later, no, even here you can see they actually signed this, I believe, a little bit earlier already, because I've actually read this before, which is why I'm saying it's not that big. But I saw the price bump right now, and I'm thinking that all the positive news coming out surrounding this might actually affect it, just because people were really generally bearish about Stellar 2. And just a lot of good influxes have been coming around, and I think that is adding to the price. That's also why I think this actually still had a positive effect on it, as people might only be realizing it right now. Too afraid to buy the dips, too much FOMO to resist buying the all-time highs. It's very difficult, guys. I know it's very easy to just get yourself lost in FOMO. However, buying Bitcoin at about $30,000 plus is just a very difficult choice, because it is very close to all-time high, yet if you're like me, you also expect Bitcoin to hit $100,000 at one point or another. So buying it at 30 is going to get your money times 3.5, for example. Buying it at 20 is going to get your money times 5. What is really the bigger difference? A little bit of money, not too much though, basically. So sometimes I'm like, well, I should just better buy it now and just let it ride the way up, and we'll see. And other times I'm like, well, let's just buy the dip, because that way you can get more coins. It just depends on how greedy you are, what your general outlook is for crypto, and basically how much time you have on your hands as well. If you're here watching all day long, you might have noticed some trends. You might know how to trade better than others, and you might get yourself a better position. Maybe you don't have any time at all. You just want to get some crypto and be done for. You never want to involve yourself with it again. Hey, every one of these has a different choice, and none of them are really bad or good in that sense. A lot of institutions are still buying crypto right as we speak. It's not like any of these things are a bad choice necessarily. 3 Arrows Capital buys over $1 billion worth of Bitcoin. It's just to show you guys all these institutions are still buying, even though a lot of others would have most likely gotten rid of it a very, very long time ago. We've also seen a couple of bigger investors get rid of it a little bit earlier. It's interesting to me how these guys are still buying, and how some others are really afraid to buy at this quote-unquote top, because it's very close to all-time high. Then Bitcoin recovers from an overnight plunge, but it is in a dangerous position. Bitcoin saw some wild overnight volatility that came about after a flurry of selling activity liquidated long positions and sent its price reeling lower. This sell-off was quite intense and caused the aggregated market to face some immense selling pressure that is showing no signs of letting up. One analyst explained that there were the market trends next will undoubtedly depend largely on the derivatives market. He knows that funding rates are still quite high and may hamper the crypto's outlook for the time being, and as such, he is calling the crypto's current positioning dangerous despite the strength of its rebound. Moving on, economics professor Tyler Cowen says crypto is useful as hedges or forms of payments. Not both, however, which is something I don't completely agree with, but hey, that is his opinion. Don't want to get too far into this, but Here's a couple, or a good quote I should say. First, the stablecoin pegged to the dollar may someday be broken, an old problem with pegged exchange rates that Milton Friedman often warned about. Second, to the extent stablecoins and other crypto assets become a major part of the financial system, they will attract more regulatory interest and thus may be regulated accordingly. And another comes here from Cohen. He warned, it is too risky to make them the bulk of your checking and savings account, talking about crypto. The dollar, euro, or for that matter, the Mexican peso are not nearly so volatile, meaning if you put in money into crypto as, just your banking, your normal storage, it could be that all of a sudden once you want to buy some groceries, your money's down 20%. And once you've bought these groceries, your money is up 20%, basically losing you quite a lot of money in this transaction, making your groceries 20% more expensive. And last but not least, Bitcoin's bubble could burst, warns Anthony Scaramucci, but he's still a mega bull. I think everybody knows that. This bigger bubble, quote unquote, could always pop. We could always go to $3,000 again. Who really knows? And that's the bigger question. Who knows is the one that can most likely make the most amount of money. Yet we all don't, so we're most likely in the losing game anyway. Whatever, guys, that was it for today's video. Hopefully you all enjoyed it. Don't complain that it's 6 minutes, even though it's called 5-minute crypto. I try my best, but it's like, otherwise I just have to cut out this article, which I just want to quickly show you guys as well. It's like a way off, right? I'm like, well, should I just show once more and get it a little bit above 6 minutes, or should I just make it 5 minutes top and just cut the last one? I don't know. You guys let me know in the comment section down below. There are no ads, by the way. Did you notice? Make sure you press the like button and subscribe, and I'll see you guys again in another crypto video.